Hey, before we start real quick, I just wanted to share with everybody who's in the room today that we're working on a project. It's part of the reason I was away last week, and we're actually now in the early stages of developing an app that we're going to use for alerts going forward. So if you're part of our Profit Builder or Profit Maker alert program, we're going to be able to, in the next few weeks, release an app, at least by the end of the year. So I don't want to overset expectations here, but by the end of the year, we'll have an app that you'll be able to download for your smartphone, your Android, your iPhone, and the alerts then will come almost instantaneously to you instead of the text, which is just an abbreviated version of the alert today, or the email, which is sometimes delayed uh, because of the way different service providers, different carriers handle the push of those emails. So we're kind of excited about it. It's going to be the whole content of an alert. You're going to be able to see the alert, see the information in the alert right on your smartphone. You're going to be able to click a link and it'll take you right to the members area of our website if you wanted to go look at prior alerts from the day before, something like that. So we're kind of excited about the development of this. The people we have developing it, it's a friend of mine who's I've known for 20 years, and it's just got a very, very smart organization in terms of the intelligence of the development of this type of tool. So we're kind of excited. Stay tuned. We'll let you know more about it in the future. Once it's ready, we're probably going to choose, 5 or 6 clients who've been with us for a while and do some testing rather than releasing it without testing. So we'll be doing that. Michael, if you don't know what an app is, you can call Allison and she'll explain it to you. Okay?
Thank you. I don't know her. Is her number still BR5678? I think I can't remember. But anyway,
VR.
I'll
Yeah.
find.
Okay. Okay.
I'll figure it out.
I just don't want you to be left out.
No, I don't like to be left out.
Uh-huh. Okay. So can you see my screen okay?
Yeah. Oh yeah. Great.
So on NASDAQ, this is a 1-year daily. It's pretty apparent to me. This is my own personal interpretation of the pattern. It's pretty apparent to me that we're in a near term, or I'll say midterm, rising channel right here. This one highlighted by one natural level of support, and then it's coming across natural level of resistance here, which was on the 22nd. That was a new all-time high on um, on NDX. Hang on just a second here. So that all-time high connects back to prior all-time highs. So that's what's defining that. All right. But that channel sits inside of a long-term channel, and I'm going to back up to a 2-year pattern to see where that long-term channel is. That's that long-term, very wide channel. It's 547 points in width. That's the range of movement that we've seen since the beginning of February, actually February 10th. So we've been in this rising channel since that period of time. The channel I was just speaking of is all contained in the upper 50% of that channel, and within that channel we have multiple cycles, sideways cycle, down cycle, an up cycle, and right now a slightly rising cycle. So it still looks to me like we are in a rising pattern. We could just, I'm going to arbitrarily pick a point on line of support. We could drop down to a level of 44.55, that range, say a month from now. I'm not predicting that's going to happen. I'm just using this as an example. We could drop down to 44.55 range and still be in an overall upward trending pattern. That would just be a retracement down to the lows of a rising pattern. It would only be if we broke below that level of support, 44.55-ish or so, or wherever it might hit it, that we might see some sort of variation from a rising channel to a declining channel. But then, and this is where I think pattern identification is very important, after that, we have a second level of support that is still in an overall rising pattern. So for all practical purposes, folks, we need to break below 4,000. I want to say 4,050-ish range before we're really going to see that we're in a declining pattern. Up until that point, if and when that happens, we actually are continuing to be in a rising pattern, but we are going to trade the cycles. So let me get down to a 60-day, 60-minute chart here. It's these cycles and the movements within these cycles that are the profit-taking opportunities, and that's what Michael trades day in and day out. That's why he likes to look for a signal to enter a trade based on a 3-9-minute chart, like here. Okay, I'm just looking at a bar chart here, but if there was a signal to enter on the AbleTrend 3-9-minute chart, you want to take that trade to the downside, and then you want to grab a profit relatively quickly, because what we're trading is these cycles: the downward movements, the upward movements, the downward movements, the upward movements. And this also goes back to my earlier point in the room today about trading Bollinger Band snaps. At the beginning of a day, frequently there can be a Bollinger Band snap pattern. Here's a Bollinger Band snap pattern that occurred right at the beginning of the day on the 12th, right? First bar of the day was pressing below the lower Bollinger Band, and then boom, we saw a very nice move to the upside. That would have been a good Bollinger Band snap trade to take. But you can go back and look for yourself at the number of times the Bollinger Band snap patterns occur and get comfortable for your own level of trading, whether or not those Bollinger Band snap patterns follow through. Not all of them follow through. Here is a Bollinger Band snap pattern, but if you're taking it at the beginning of the day, you wouldn't have taken this because this was during the middle of the day. But just using that as an example, here's a Bollinger Band snap pattern that pressed below the 3 standard deviation Bollinger Band, but then it continued lower for another 1, 2, 3, 4, 5, 6, 7 bars. So another 7 hours, okay, before it snapped back higher. Now, if you'd gotten into that bar right there, into a Bollinger Band snap pattern trade to the upside right there, you would have been okay. The next day, probably would have gotten out at even, because you would have just let a sigh of relief and felt like you got away unscathed on that trade if you hadn't already taken yourself out at an arbitrary stop. If you'd held the trade longer, you would have been okay. So the Bollinger Band snap pattern for me is the only pattern I like to follow in the live trading room that is not specifically presented to us by AbleTrend charts. And I suggest that you get really comfortable with Bollinger Band snap patterns on 60-minute charts and on daily charts, because those are the ones that tend to follow through most frequently. Now, I tend to look at both 30, 60, and daily when I'm looking for Bollinger Band snap patterns first thing in the morning. And those are the ones that, in my opinion, tend to be the most lucrative. So if you are a day trader, if your account is set up to day trade, and you want to put some capital in for a quick trade, then Bollinger Band snap patterns are a great opportunity. If you're not a day trader, don't be discouraged, because you can still take advantage of the Bollinger Band snap patterns. You can get into a trade based on a Bollinger Band snap. You could buy a long call or buy a long put, and then, as we taught in the Profit Accelerator program, you could lock that in by selling to open, by legging in to a spread, selling to open a short leg against that, and you can lock in generally a guaranteed profit on that spread that you would close out of the following day without having to do a day trade. So understand your strategy, understand how much capital you're willing to commit, and then decide what patterns you want to follow. These are all the decisions you have to make in your trading business in order to be successful. If you come to trading every day without a plan, without a concrete understanding of what you personally prefer to trade, what signals you want to trade, the integrity of the signal. Maybe you only want to trade patterns on AbleTrend that are double stacked either to the upside or to the downside. Maybe you don't want to take that signal that's just a single sell signal or a single buy signal. That's entirely up to you. Get comfortable with what you want to do. Maybe you don't want to trade calendar spreads or diagonal spreads. You don't want to trade a long spread. You want to trade credit spreads. Then get comfortable with that and know that that's your plan of attack for the day. Are you going to trade Bollinger Band snaps? Take a look at your bar charts the first 10 to 15 minutes of the day and look for those opportunities. All of these are the decisions, the conscious decisions that you need to make. The reason I'm emphasizing this today, folks, is because I've emphasized so much throughout the years of training and teaching that I've provided to traders that it's so important not to overcommit your capital, not to exceed a certain level of risk. However, I find too many traders who get into a situation where they have overexceeded the risk, and it all boils down to one primary thing. It's because they didn't have a plan coming into their trading day. They didn't consciously, either in their mind or on a piece of paper, acknowledge that this is the risk that I'm willing to put into play today. They are influenced by the signals. That looks like a great opportunity, and because every new opportunity in our minds is a guaranteed profit, then there's really a minimal amount of risk in our thought process. And it's only when that trade doesn't work out that that risk becomes real to us, and now it's a worrisome thing for us. So you come into your trading day with a plan. Write it down on a piece of paper if you need to. What is my plan today? I'm starting the first few minutes of the trading day looking for Bollinger Band snaps. I know I'm going to commit no more than X amount of capital risk to trading today. And that may be more for some of you than others. It's going to be influenced by other positions you have open, positions that you need to manage, whether you have no positions open, and your personal tolerance of risk. Okay? Understand your risk, understand the strategy, understand the risk, understand the signals you're going to look for, understand what strategy you want to trade, and it doesn't have to be the same every day. Maybe today I want to focus on credit spreads. I'm going to open up some very conservative, nice credit spreads that are going to give me a great profit in a near term, maybe 1 to 2 weeks out. Maybe tomorrow I'm going to be looking at calendar spreads and really want to understand more about that. Part of your trading business is learning, and part of learning is having a plan and being conscious and awake and alert to what you're doing, not just following along with what someone else is doing, because what someone else is doing, that someone else has a account, has a plan for themselves, but that may not marry up to what works for you. So let's take a look at SPX. Okay, SPX, yeah, we're in a declining cycle here. It's kind of interesting that it looks so much different than NDX, but we are in a declining cycle. And one of the things, you've heard me say this before, but one of the things I look for when I'm identifying my cycles and channel patterns is, do they align with the Bollinger Bands? And in this case, I'd say they do. The Bollinger Bands are opening with a little bit of a hint to the downside, mostly sideways, but a little hint to the downside. And SPX on our 1-year daily chart, you can see we're trading not at resistance, not at support, not at the upper or lower Bollinger Bands. We're kind of in a mid-range area. We're in a pattern that is about 67 points in its range, And yeah, there's nothing at all unusual at all about that pattern. There's probably another channel in here that I could identify. If I go back to the first higher low after the prior move higher, move lower, sorry. We are in this rising channel, and this cycle sits inside of this rising channel. So if I extend this out, you could see here that we would need to break below 2117-ish, somewhere around in that range. We'd need to break below this level of support before we could say that we are in a more significant declining pattern. But right now, it appears to me that we're just in a declining cycle that is nothing more than a retracement back down towards a level of support that is part of a rising channel. Let's take a look at RUT. RUT's got that same rising channel. It's got a cycle within that rising channel, but this cycle on RUT looks like it is slightly rising cycle. I can extend that out. Oops, that's not the one I wanted. There we go. So slightly rising cycle, but we're sitting kind of in the middle, just a little off of the middle of that rising cycle. And that corresponds with the Bollinger Bands. So, you know, there's not a lot of volatility in the market right now. There aren't many of the major swings, you know, big swings that we were seeing earlier in the year. But these are excellent tradable patterns. When you pay attention to your 3, 9, and 5, 15-minute charts on AbleTrend, you're going to catch cycle movements that are happening within each of these bars. If we get down to let's go down to a 10-day, 10-minute chart, you can see these cycle movements are the movements lower, the movements higher, lower again, higher. These are the types of movements that the AbleTrend signals are offering you profitable opportunities to take. And if you have a good solid trading plan, you know how much capital you're willing to commit to your trades, and you know what strategy you want to trade to take advantage of them, there's absolutely no reason that you can't be very profitable on these positions. Let's take a look at Amazon. I'm going to look at Amazon because we have an active position in one of my smaller accounts, as well as in our Profit Builder service. So Amazon, I first of all want to show you that Amazon, if I pull up an all-time period, is clearly trading last week at an all-time high. New all-time high last week when it hit 839.95. That's an all-time high. Now, you know, the question I always ask myself about stocks like this, when it was at an all-time high, a new all-time high the week before of 774.98, here's the question I ask. Who exactly is it that comes to the market every day and says, you know what, that stock's trading at the highest price it has ever traded at, and I want to be a buyer? Who wants to be paying money for a stock and paying more than anyone else in the history of the stock? Now, I know there are logical reasons why that occurs, okay, but it's just a very, very simple question I ask myself when I look at stocks like this. Do you want to be a buyer, like last week when it hit 839.95? Do you want to be a buyer of a stock that is trading at an all-time high? And do you want to be a buyer who is now paying more for that stock than anyone ever has before in the history of the stock? Okay, that's just kind of my silly little way of trying to provide some logic to what's going on here. I don't want to be a buyer of a stock at that level. I want to take positions possibly to the downside at that level when I see Bollinger Band snaps. Now, last week we had 4 days of Bollinger Band snaps. consecutively. Prior to that, we had 2 other days of Bollinger Band snaps. So this is one of those patterns where if I had gotten in on this Bollinger Band snap right here on the 22nd, and I'd taken that trade to the downside, it might have worked out if I happened to get in right at the top at 805 and 2 days later it traded down to low of 797. I might be out of that trade. Okay, so it still might have worked out, but you can see here that it really hasn't given up yet. The stock is continuing to pace along a Bollinger Band pattern. That doesn't mean that the Bollinger Band snap strategy is not valid. It just means that this is really pushing the envelope. It's really stretching the price here. And eventually, when the price snaps back, my personal opinion is it's going to be a more significant, more pronounced snap back. Here was a Bollinger Band snap. There was a significant snap lower. Here was a Bollinger Band snap. It didn't really snap back lower. It drifted lower, but it was enough to take a profit. Here was a Bollinger Band snap. It drifted lower. Very good profit opportunity there. Here was a Bollinger Band snap on the downside, trading to the upside. It followed through the next day, a more significant 3 standard deviation snap pattern, and then there was a real nice follow through there. So if you're interested in the Bollinger Band snap pattern, go back and educate yourself and just go bar by bar. When you identify them, take a look and see how many of them played out immediately versus how many of them maybe didn't work out at all. I see one back here that maybe didn't work out at all, and that's why we manage positions. So know how to manage the position, know how to manage the strategy that you're trading. Take a look at Priceline also. Now, Priceline has been in a mostly it's an uptrending pattern here. This might need a little bit of adjustment. Let me extend that out. I do think it needs to be adjusted a little bit. Okay, so what I'm going to do here is I'm going to adjust up and I'm going to capture this natural level of resistance price point here. It ties to natural level of resistance price point here, and it ties to one back here, and then all of that ties to this natural level of support right there. Okay, so Priceline is in a rising cycle right now, and that cycle corresponds nicely to the Bollinger Bands. You can see that we're trading near the top of that cycle. So at some point, it will most likely cycle to the bottom of that cycle. And yeah, that could potentially be down around the 1420 range, maybe 53 points below where we're currently trading. These are the types of patterns I like to be aware of. And then when I'm looking at AbleTrend, and if I start to see my 515, my 3090, my 120 daily starting to set up for potential downward movements, and I know I have a visual in my mind about where we're trading relative to long-term patterns, it just helps reinforce my decision to take the trade. Where's Priceline trading on its 10-year timeline? So we're getting really close. The all-time high on Priceline is 1476. Oops, sorry, my bad. I'm looking at it at an angle. So the all-time high on Priceline prior was 1476.52. Last week, 1481.78. So we hit a new all-time high. Sorry, these are monthly numbers. Sorry. Let me go to a 5-year weekly. Those are monthlies. But last month, we had a new all-time high on Priceline. Last week, 1481, new all-time high, 1476, 1481. So what's interesting to me is Michael's been talking about this morning about how, he just, his view, his sense, his intuition, taking everything into account, Elliott Wave, AbleTrend, bar charts, that we're probably going to go lower. Doesn't mean we're immediately going to cycle lower right now. That's not what that means. It just means that overall there's a building bias to the downside. And when I look at so many charts that are setting new all-time highs, and I look at indexes that are setting new all-time highs, I mean, that's just that's just a perfect storm of setup for downward bias at some point. And it doesn't mean it's going to happen today, Monday. It doesn't mean it's going to happen this week. Might not happen until after the election. Might not happen until after inauguration. It's going to happen at some point. It will absolutely, without any doubt, happen that there will be a downward cycle and maybe even a downward trend, because that's what stocks do. They trend lower, they trend higher, they trend lower, they trend higher. Where's the next lower trend? It's coming. There's a pattern here that we could possibly have to break before we ever get into actual declining trend, which would put Priceline below 1,000, somewhere around in there. So anyway, let's just take one last stock. Allison was talking about ISRG this morning in the trading room. Here we go, ISRG, 5-year weekly, new all-time high last week. So that's Priceline, Amazon, ISRG, all new all-time highs last week. This pattern needs to be changed. I think this is just a widening of the pattern possibly. Let's just move it up and capture that new all-time high and the current high of today and put our support back where it was. So it's just a widening of the pattern right there. But there is a declining cycle here, and it's really being identified by the declining lows that we had right here. And then we're coming across that natural level of resistance last week, which was a new all-time high on ISRG. And then today, we're coming off of that just a little bit. We have a lower low than last week, and we're trading right now in the bottom half of today's range. So slightly declining pattern there. All in, if I think about Amazon, Priceline, ISRG, and the 3 indexes, I personally am going to be very cautious to the upside. Doesn't mean I won't take a trade to the upside, because we could still cycle up there, but it's going to be a completely validated buy signal based only on Able Trend. I use 5-15-minute charts on stocks, and I use 3, 9, and 5-15 on indexes. And then I also will take a look at the longer time periods, the 30-90 and the 120 daily, just to see if everything is setting up and aligning. So I hope that helps to have a little bit of an understanding of what my personal view of the stocks and indexes are. But we're definitely trading at some pretty lofty levels. The one chart I keep going back to is NDX, and we're trading well above now the previous all-time high, which was in March of 2000, which was 48.16. Now I think our new all-time high is 48.95. So 48.95. So we've exceeded that. And again, I'm not saying this will happen, but I think it's very wise to keep in mind what happened after March of 2000. Now, lots of arguments could be made about, well, that happened because of X, and X doesn't exist anymore. We also know what happened to a smaller degree in 2008, 2009. So where's that next major decline? When is it coming? What will cause it? I don't know the answers to that, but if you've ever read Nassim Taleb's book, Black Swan events, about Black Swan events, it's kind of interesting how the markets are unprepared for what they don't know, but after the event, they rationalize and justify and explain why everybody should have known that. And there are the potential of Black Swan events at any given time, not just in economic markets, but in many areas of our life. Black Swan events are just something that can occur. So with that thought in mind, I'm not at all by any means a negative person when it comes to this stuff, but I am a realist, and when I see this type of activity where now we've exceeded that all-time high, and the major sell-off that we had that seems to have, devastated so much of the economy when that occurred wasn't even at that level and wasn't even as pronounced as the 2000, March of 2000 and forward. Just as a reminder, March of 2000, we traded at a high of 48.16, and in October 2002, we traded down to a low of 795. So could that happen again? I don't know. I'm not trading that. I'm not looking for a big Hail Mary trade here, but I am keeping that in mind, and it certainly is in my thought as I follow my signals on AprilTrend. So I hope that's helpful to you. That's my perspective. And please come to the trading room every day with a plan of what's going to work for you personally. It's your trading business. It's your success. Absolutely no reason why you can't be successful with this business.